Hi everyone, welcome back to Bridge Podcast. This is a Q&A session and a viewer has asked about the comparison of the surplus amount which Tata Consumer Products and ITC has. So the question is, I can see ITC having cash reserves of about 64,000 crores, Tata Consumer having 12,000 crores. Tata Consumer to acquire Chanks. Earlier it acquired Soulful and there was talks to buy Bisleri. But Yoga Bar was only the ITC recent acquisition. What would ITC do with this much reserve? Like it can swallow a company like Jyoti Labs easily, but it made the bid for checks around 4,000 crores, which Tata Consumer bought at 5,500 crores. What can be ITC's strategy for the upcoming years? Will it be a company with major profits made from cigars or transform to other segments? Kindly let me know what Anand's view on ITC after a decade.
Well, my brother's view on ITC after a decade is what he'll tell anybody. I cannot predict the future.
Okay.
But based on what ITC has done so far and the way ITC is run, Anand feels the business moat it has, the brands it owns, give it significant advantages over its competitors.
Okay.
Now, yes, ITC has cash reserves. Why didn't ITC do this or that? That is the ITC board's decision. That as an investor, you can feel they can do this and do that, but it completely depends on the management and the vision they have.
Okay.
And if you want to know why they're doing this and why they're doing that, you should dive into the annual reports and their quarterly earning reports and get onto their investor calls, and you can ask them, send them questions, email them, and you can read whatever they're putting out in greater detail to investors. That will give you a greater insight why they only offered 4,000 crores and didn't match Tata Consumer at 5,500 crores. Why they're sitting on their cash reserves, what is the point? It's like you asking me why Warren Buffett is sitting with so many $1 billion in Berkshire Hathaway, and why is he selling his little bit he sold in Apple stake, and he's looking at huge treasury yields in short term. Why is he not taking all that money and just going buying lots of companies? Warren Buffett, like he said in the conference, will swing at pitches he wants. In cricket, you will bat on the balls you think deserve to be swung
for
at.
the right bowler to come.
So ITC feels it is not the right ball, while Tata Consumers feel it's the right ball. It is a purely company to company, board to board decision. And you may see as an investor, today it might look like a wrong decision.
Okay.
Maybe 10 years from now, a decade later, these bets which Tata Consumer made didn't go the way Tata Consumer thought, and maybe they would have shut down Chengs, they would have shut down Soulful. At that time, you might come back and say, oh, ITC made the right call.
Okay.
Or in 10 years' time, they would have bought some other company where Tata Consumer didn't have the cash because they spent all their money, and you'll be like, they did the right thing. So looking forward, it's hard to see. But is all profits of ITC going to be cigarette based? No. A decade from now, ITC will have less and less to do with cigarettes than it does even now. That's why they're even demerging the hotel business so they can focus, and they're diversifying themselves very nicely compared to their parent company, British American Tobacco, which is not doing that. 10 years from now, British American Tobacco will be under a lot of stress to even exist as a company because the tobacco industry will be slowly be snuffed out. So it's interesting.
And the market is moving slowly from the cigarette products. Does it affect the ITC profits now?
Yes, if ITC was purely a cigarette company, of course it will affect. But ITC is more than a cigarette company. ITC is actually not known as a cigarette company anymore. ITC is known as hotels, it's known as everything else, paper company. They happen to make cigarettes. And they don't go around totoing the cigarette company anymore.
Okay.
ITC, most people who use ITC products and ITC shares, they don't even know what ITC stands for. It's a heritage.
Yeah.
It's like KFC. Most people eat KFC and they don't even know what KFC stands for. So it's like that. I don't think ITC would be very much in tobacco going forward, years and years to come. By the time I leave this world, whenever it is, I don't think ITC would have very much tobacco in them. So even Anand's view is the same. That's why he believes in ITC. He says if you look at ITC's brands they own and the way they're structuring the company, it is going to be more of a multi-brand, multinational, large company.
Okay.
A conglomerate of different industries and different brands. And it will have very little to do with cigarettes. They're focusing a lot on growing outside India now, exporting their products, and I think they'll do very well. And remember this, they're a professionally run company. They're not like the Tatas, which are run by Tata and Sons, the Tata family. There's no ITC family. They're a professionally run and a professionally managed company. So the way they do things, the board reacts to things are very different. In Tata consumers, there could be a lot of influence from Tata and Sons to raise the offer bid, to do anything.
Okay.
And the way they infuse cash and take out cash is very different compared to ITC. ITC is professionally managed and they always are answerable to investors, and the board knows that, and they will not move the way Tata and Sons move or Tata consumers move. So keep also that in mind.
Okay. So I hope that this video was informative and interesting. If you like this video, please share it with your friends and subscribe to the channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.